Hey there, traders. What's going on? Jamie Saettele here. It is September 18th, 2015, and day after the big FOMC decision, of course. And what I wanted to do is just kind of go over the US dollar index here heading into the weekend. So, response for the most part, obviously on the market was bearish, um, but the dollar's climbed back today. Again, one of those old trading things, Friday lows, Friday highs, beware, getting whipsawed on those Friday highs and Friday lows. Saw the pound dollar actually uh, top out at an interesting spot, and euros pulled back shy of where it was in the May and June highs. Um, the May high was 1465. The June high, I think, was 1435. So we actually topped right in the middle there, about 1450. Dollar yen contracting in a triangle. Um, would think that it probably tries to retest the lows made down in August. And then the Aussie just kind of steadily, quietly making a case for, a broader bottoming process. So those are the four currencies that are in this index. And really taking all the emotion of FOMC out of it, um, and just looking at this chart, I think it's pretty clear, that the dollar's come into a big support area, right? And the dollar, not just here from the 200-day average, excuse me, which is the magenta line here, but you've also got slope support, okay? This support, the slope's been in play for really a very long time, kind of defines the move going back, six or so or four or so years. So, I would really watch, be careful about getting too bearish at the bottom of a range, which, in effect is a good way to lose money, right? Selling at the bottom of a range. You're in a range, you range trade, okay? So if you're selling the bottom of a range, you're kind of selling at the worst possible price and you're buying at the top of the range, which was up here. People are getting bullish dollar at the worst possible price. Remember, we had a very long trending period, and these long-term trends or long trends are typically interrupted by, lengthened sideways periods. And eventually this thing will break and we'll have a big directional move again. Okay. So look, if tomorrow, or tomorrow is Saturday, but if Monday or Tuesday or whenever, if this index breaks down here, okay, breaks the slope line and really, gets under the low here from August 24th, then, yeah, get real bearish on the dollar for a larger move to the downside. Okay, but at the moment, kind of predicting that the market's going to break down while it's testing and responding at support is really quite dangerous. Now, I will say that if the this index, rebounds, several more, a day or two longer, I would watch for 11,966, okay, as a resistance area in this index. And the reason for that is it's a big high volume level, and obviously I don't really have volume figures here on the US dollar, but it's a big it's that day 417, that was the week of the top, okay, and that was the Friday close, and that level's been interesting, support before. It was support actually here in July and August before we saw a big breakdown, and it was also support for a couple days before this latest drop. All right, so if the larger move is down in the US dollar generally, then you're going to want to see resistance at 11,966. Okay, I wouldn't allow for any sort of move over, what is that, 12,015. That's the high from this week. Wouldn't want to see it above there to maintain a near-term trading bias, I should say, on the short side. So that's the U.S. dollar daily, and those are some big levels to pay attention to. Really, 11,830 is support to where we are today, 200-day average, and then 11,966 is resistance. And this is the weekly chart, same exact lines on this chart, but kind of get a clearer view with the bigger picture here. And the bearish potential is certainly significant. I mean, if this does break down here again, this is your big breakdown area. If it gets down below that August low, then you've got support potentially down near the lows for May, specifically the close down there, which is, what's that, about 11,668. But, bigger picture, you could get, down towards the 11,200s, which would be a substantial move. Okay, and really would kind of be a retest, um, of the huge bull trend that we're in the dollar. Okay, so obviously that would be those would see some significant moves across the various components of this index. But for me, make it simple here, right? 11,966. Watch that level over the next few days to see how see if this uh, the index wants to continue lower, over the next few weeks. Okay. All right. So that's it. Jamie Saettele here signing off, and good luck.